Indian equity markets have been at the mercy of foreign portfolio investors for over 6 months now. Since October 2021, FPIs have sold equities worth nearly 1.58 trillion rupees as rising crude oil prices and steep valuation of the markets made them nervous. Of this, peak selling was witnessed in March 2022 when FPIs sold equities worth 41,123 crore rupees. According to analysts at Jefferies, India's positioning has come down to neutral or slight overweight level over the last 3 to 6 months, implying 50 to 100 BPS weight reduction. While valuations have come off from peak, they still remain the key discomfort. VK Vijay Kumar of Geojit Financial Services says that along with relative rich valuations, FPIs think markets have not priced in Fed's monetary tightening.
Valuations in India are not cheap. Nifty is now trading at about 19 times FY23 earnings. The premium to emerging market benchmark is also higher than historical averages. In this context of high valuations, foreign portfolio investors think that the market has not priced in the expected steep monetary tightening by the Fed. In India too, RBI may take 3 or even 4 rate hikes this year and switch to a neutral monetary stance.
That said, a recent trend has emerged in the markets, which is slowdown in the buying momentum of domestic institutional and retail investors. Data compiled by BS Research Bureau shows that DIIs bought equities worth 4,471 crore rupees in October last year. This buying increased to little over 42,000 crore rupees in February this year. However, so far in April, DIIs have bought equities worth 11,000 crore rupees only. So, is this a worrying sign for the markets?
Because a large part of the retail flows is still the SIP book, which is more than a 10,000 crore book per month, which happens, right? You may, at times, you do see an year-end phenomena during March, where there is especially flows move into CASA and bank fixed deposits and things like that. But otherwise, we don't see a larger trend playing out. The other part is that recently, of course, we've seen a significant run-up in the commodity prices which are there. So in these type of during these type of times, you do see a larger allocation which happens to commodity markets rather than service-driven markets which are there. And we're also coming out of large inflows which had come into this place. So a lot of the selling which you're seeing is across many emerging markets except some of the commodity markets.
But will these trends continue?
What we are seeing is that at higher levels, there is some kind of profit booking from the foreign investors. On the other hand, we see that there is a lot of support from the domestic inflows. The SIPs itself are in the range of 11,000 to 12,000 crores every month. Apart from this, we do not see a lot of anxiety among the small investors. So we believe that the domestic inflows will keep helping the market. So overall, we see markets in a range over the next few months. Over the whole year 2022, we believe that it's going to be a stock pickers market.
From investment viewpoint, analysts at HSBC remain bullish on defensiveness, recovery plays with strong earnings outlook and industrials. Individually, they like ICICI Bank, Infosys, Bajaj Auto, Maruti, L&T, HUL, Apollo Hospitals and Sun Pharma. On Thursday, the BSE Sensex index ended at 57,912, up 874 points, while the Nifty 50 closed at 17,393, up 256 points. On Friday, markets will react to HCL Tech's Q4 numbers and await March quarter earnings of Hindustan Zinc, Tata Metaliks, and 12 other companies. Globally, developments around Ukraine-Russia war and rising COVID-19 cases will guide the sentiment.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.